Is the Canadian property bubble reaching contagion? Our article to start us off today is the Financial Post, which reads, Canada is top 3 frothiest housing markets, flashing warnings not seen since the 2008 financial crisis. Canada comes second only to New Zealand. We got New Zealand, Canada, and then Sweden ranked as the world's frothiest housing market based on the key indicator used in the Bloomberg Economics dashboard. Frothy, a good term to use for Starbucks, not so much for the housing market. A cocktail of ingredients is sending house prices to unprecedented levels worldwide. Here's what they say. This is an economist, Niraj Shah, said, record low interest rates, unparalleled fiscal stimulus, lockdown savings ready to be used as deposits, limited housing stock, and expectations of a robust recovery in the global economy are all contributing. Only making matters worse. Bloomberg Economics Dashboard compiles 5 indicators. I looked at them, but the big ones here are price to rent and price to income ratio. Then they go on to talk about house price growth and kind of the rate that that's all happening. But those are the main measures. John Pisales on Twitter said in the first quarter of 2012, the average Toronto home cost approximately 20 times the average annual rent, which is crazy till you look at 2021, where home buyers are paying 36 times the average annual rent to buy a home. Ben Rabideau on Twitter said Canada's greatest government debt to GDP ratio expanded by over 30% points from Q4 2019 to Q4 2020, which is second only to Greece based on the data. So we got some massive debt to GDP. We got some massive cost to own relative to rent. We got massive amounts to own relative to your income. We are in a tough spot. Ranking in the top tiers, at least we come first in something or second. But things are getting pretty dire around here. Obviously, this is not a drill. We want to know the steps you should take when you're in a burning building. Really large ones. At least that's what a lot of people would say as it relates to our market. When we look in a Better Dwelling article, I want to look at 2 aspects with you today. And both of these things are extremely interesting, a unique take on what could be forming or what could be an indication that we are in a bubble that has reached, as they say, contagion. Here we go. Prices just outside of frothy Canadian real estate markets are growing much faster than in the city. That's typical of a bubble. Interesting. And it's called housing bubble contagion. That's the concept. Comes from a paper titled Housing Bubble Contagion from City Center to Suburbs, which was written by 3 Taiwan-based researchers who argue bubbles spread outwards. Okay. Bubbles force investors and developers to look for, quote, deals outside the city, sending prices soaring. The result is a larger bubble with suburban prices being much more frothy. Seem familiar? Looking at Canadian real estate data, that's exactly what's happening in Canada. So what is this housing bubble contagion? Let's hear about it. Home prices diffuse from a central hub or main city to the surrounding areas. That's well established. It wasn't until 2017 that these researchers discovered bubbles follow the same path. Real estate bubbles follow. It's a nice long course of history, of course. You only give us a few years, but that's enough. That's sufficient. We're going to write a whole article. We're going to make a whole podcast over this topic. I find it interesting. Well, I hope you guys do too, but it's often mistaken as a spread of fundamentals. You know, people can't afford Toronto, so they go to the outskirts communities. It's all fundamentals, baby. People want to stay at home. I mean, this is a new thing. This is unique because of COVID. Not so fast. Talk about that in a second. But when this happens, it's called a bubble contagion. Not unlike a virus, the host is infecting those with close contact. Toronto, neighboring cities, huh? See that? The issue is passed from person to person, but instead of getting sick, they tear down bungalows thinking it's worth $2 million. So here's how they say it's spreading, not just across the GTA, but across Canada as a whole. Toronto homes located within 1 kilometer of the city, the growth has fallen 1.9% in the fourth quarter of 2020, just to put into context. Once you get 30 kilometers out, double-digit annual price growth becomes normal. And that's what we're seeing across the GTA. Well, hit 64 kilometers outside the city and prices are making 19% annual growth. The number goes up. I mean, we see cottage country hitting 30 numbers and over 100 in a couple years in some cases. But if you guys are planning on commuting to work from 64 kilometers, good luck, man. This weekend, just from kind of, exploring, I was able to burn 2,000 calories, and that's the last time I leave brownies in the oven while I go out for a walk. Didn't go too far. Anyways, this is nothing new. We talk about this idea. Hey, you know what? It's COVID. It's the work from home trend. I'm guilty of that. And I think that in a lot of ways that is. I mean, we've seen people leaving the city long before COVID made itself known. In fact, we can look back to the late 80s, early 90s bubble, and here there's an article from the Globe and Mail titled "Toronto's Growth Moves Away from the Core." That was in May 1989. The journalist mentioned people were fleeing the city. They're running away due to, quote, high rents, traffic congestion, and restricted developments of downtown Toronto. Red tape. Sound familiar? Well, prices cratered and values didn't recover until 2010 in terms of real value. Well, in the early 1980s bubble, we saw something as well. Let's go back a little further. It was in the Toronto Star. There's an article read, "Bigger, Better Homes Seen as Family Refuge During Tough Times." In it, the author said, global catastrophes have people seeking out larger homes in the suburbs. More family time and outdoor space were of sudden interest. Got to get away from all that craziness. So this is nothing new. Nothing new. And maybe an indication of a bubble. I mean, it seems to have worked in the last few decades, though we've just been kind of tracking this concept of a bubble in recent years. But is this just limited to the real estate market? Not so fast. This is also happening in the rental market. Listen to this. It's not just Canadian home prices showing bubbly signs, but rental prices are following too. The cost of renting an apartment in the suburbs is rising much faster than in the city. The discount for being located further from amenities is disappearing. Forget you got a social life. It doesn't matter anymore. You go further away. The idea of the bubble here being the prospect of prices going up faster in the suburbs is leading people to form a new bubble, a contagion, if you will, in the suburbs. In a normal market, the cost of real estate is higher closer to the city's central business district, or the CBD. Higher real estate prices tend to be reflected with higher rents as well. This makes sense since the CBD has the highest concentration of amenities. But what do the numbers show amid COVID? Let's look at them. There's evidence of prices rising faster in the suburbs for almost every major city. Within 5 kilometers, to put into context, of downtown Toronto, the average price fell, talking rentals, by 12.05% in May when compared to a year before. Well, last month, the average discount for renting 5 kilometers from the city was only 3.0% in May 2021, about half that of last year. That's less than half the size of a year. Locating outside of 30 kilometers, from the center only saw an average discount of 9.8. So they dropped less from the center. That's less than half the size a year before. So we're starting to see, in other words, success in these outer communities, as it relates to the rental amounts. The peak discount is seen 65 kilometers from the city, and it's only 15.7%, almost half the 31.6% seen last year. 60 kilometers away, there's a definite flattening of the rental curve. We're starting to see in the downtown core, rents have come down pretty significantly. We're also able to break that down a little bit further. We're starting to see that there's more condo rentals losing market share and other rental housing types are picking up. That's actually according to Alex Zeland on Twitter. But we also see relatively flat rental inventory. That's a bit of a weekly update for you. But all this to say, this flattening of the curve, we start to see really depressed rent rates in the downtown core. The further you go, in some cases, we see them going up really quickly. So for a while there, we were even seeing, I saw condos in Mississauga were cheaper to rent than in the downtown core, which doesn't really make sense from this idea of amenities. It only makes sense in this framework of a bubble, people running. Where is there a bubble, you may ask? I'll let you fill in the blanks on where that's happening, but maybe the contagion, the virus, has extended beyond Toronto. Finding a decent rental is getting harder and harder now. The market is going up in smoke.